Funding for Market Journal is provided by the Nebraska Corn Board.
Growing more with less is the mantra of Nebraska's corn farmers, and they're using incredible technology to do it. Soil moisture monitors let them know when their crop needs water and how much. GPS systems eliminate overlaps in the field, saving fuel and money. New hybrids reduce the use of pesticides and increase yields. When you're talking new technology and innovation, Nebraska corn farmers are all ears. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Jeff Peterson gives an update on harvest progress. Bruce Anderson talks about cutting or grazing alfalfa in October. Brad Lubben discusses farm program payments, and Britt Weiser explains how farmers can control ephemeral erosion. Jeff Peterson from Heartland Farm Partners is our market analyst this week. The U.S. Department of Agriculture's October crop report helped breathe life into soybean prices. After the agency updated its estimates on the size of this season's harvest, the November 2017 futures contract gained 27 cents and reached $10 a bushel for the first time since July 31st. December 2017 corn comparatively has been sluggish. The contract closed within a 9-cent range for 5 straight weeks. Jeff joined us Wednesday afternoon to talk about how the USDA's latest numbers have impacted prices, but we began by asking about harvest progress and yield results across the country.
You know what, Jeff, this harvest is going along slow, and especially if you take a look at the East versus the Western Corn Belt. Western Corn Belt is slow, but even nationally, 28% harvested on the corn side. Jumping over the bean side, 49%. Doesn't seem so bad, but last year we were 59%, and actually the 5-year average was 60%. Then we move over to Nebraska, and on the corn side, we're only 17% harvested. Doesn't seem so bad, but we were 33% last year, and actually 39% would be our 5-year average. And then we jump over to soybeans. And on soybeans, we take a look at that, and we're actually 33% harvested. Doesn't seem too bad at first glance, but 59% last year, 5-year average 67%. Now, we took a little time to dig into the records. That's actually the slowest start we've had on soybeans going all the way back to 1986. And it's the 5th slowest start we've had going all the way back over 36 years on the bean side. So it's off to a slow start.
What are you hearing for yield results?
You know, it's all over the board. But I do think, as much as I hate to admit it, Jeff, is that USDA is pretty close in their numbers. We wouldn't have believed it earlier. We're hearing some pretty good corn yields, but yet we also are hearing some bean yields that are off a little bit from last year. So I think USDA's got it close. One thing that does worry us a little bit is the harvest loss. What we're finding, a little bit more stem borer problem out there on beans. Also, some of the bean pods are popping. So as a result, we think that is going to impact yield just a little bit.
You guys also went into maybe why those yields in production is going to be a little bit higher than some people are expecting. Explain why it might be.
Yeah, it's really probably a lot of little things. The best way to think about it, we really, over the whole Corn Belt, we came in and actually had subsoil moisture that was in really pretty good shape. And early on, it looked like there was going to be some dryness, but then if we were looking at a precipitation map, we'd have some areas get missed, and then along comes the next month, and those areas would get hit. So precip probably never got quite bad enough to really cause us a problem. That's probably best seen as we look at the crop condition numbers. Now, we used to look at just the good to excellent numbers, but this year, as we studied them a little deeper, we went and looked at the poor to very poor and the fair, and as we brought those all together, it really showed that this year, unlike some of the other years where we've had these type of temperatures, the plants never got stressed as much. And as a result, when we got the cooler temps in August and a little bit more precip, we still were able to bring these yields back and give us some better numbers than what we would have anticipated just by actually going through the actual conditions.
Let's talk about prices. How have they responded to the last USDA report?
It was nice to see the report, and it was nice to see the strong move that we got with soybeans. As much as I wanted to see higher prices, though, it felt like maybe that bean move was a little bit overdone. One of the things that we had noticed, the funds, they jumped in and they bought bushels, and the funds are long right now. Now, we had a nice move up over $10, which gave guys a chance to sell a few beans, off the combine if they needed to. Now we've kind of started a pullback in here, and we'd probably expect to see a little bit of selling pressure in the short term, not the long term, but in the short term, just because we're really just getting into the strong part of really the soybean harvest.
That soybean rally also triggered your first sale for the 2018 crop, correct?
Yes, it did. We did. We decided, we were able to get up over $10 on the November 2018 contract. We said we don't really like the price, but we think that's a good starting point for us to get things kicked off.
Lay out where you are for 17 and maybe where you would target additional sales.
Yeah, and as we come in and start looking at this whole crop, one thing that we have to say is that if you've got bushels and you're going to have to move them to town, make sure your bins are full first. As you come into town, the big thing that we want everybody to think about is that, do I need to generate cash, or do I really need to sell them? If I need to generate some cash, there's some good alternatives. What we like first to do with them, rather than sell them, because overall, Jeff, we believe after we get past harvest, we think we'll see basis improve. We think the futures price will get better after we get past harvest. We like the extended price contract, and think about it this way. What that allows you to do from the elevator side is, in essence, you're selling your bushels, and then they're allowing you to watch either the March or the May or the July futures. If the market goes up from here, you're going to get a better price. However, if the market goes down, you are going to get less for your crop. But we do like that one. The reason we like that one is you can get an advance on it, so it generates some cash. The next best alternative would be the basis contract. So you could set your basis, collect some cash. Our least favorite choice really would be putting stuff on delayed pricing. The reason that we don't like that would be the fact that we think you're going to spend too much up on storage and you're not going to get those dollars back.
Why do you think prices and basis will improve?
Well, a couple things that we're looking at. First of all, let's start off on soybeans. Overall, in the world picture, world stocks are tighter than they were a year ago. In the U.S. situation, U.S. stocks are going to be tighter than they were a year ago, okay? We combine those also with the situation in regard to weather in South America. La Nina, there isn't a lot of talk about it, but La Nina is having a little bit of impact on South America. It's probably not showing up yet, but I think it will. But what is causing this to happen is we're seeing a little bit of dryness actually happen in northern Brazil, which is keeping them so that they aren't able to get planted as quick. We think there's a chance that could come back and cause them some additional problems as we go further down the road.
Will you explain a little bit more on your basis thoughts here?
Yeah, the basis thoughts is that we're getting far enough through harvest and we're getting far enough through the calendar year that we believe that even though there's a lot of bushels out there, we really think that the processors and the exporters are going to use up a lot of those bushels. And as a result, the bushels are going to get tucked away, and ultimately once we get past harvest, the bin doors are going to close and we will see better basis. Having said that though, Jeff, if you've got bushels that do have to move at harvest time, then what I'd say is on beans and on corn, 4 bushels for harvest delivery, if you have to sell them, you need to be locking the basis up on those now. There's some very good basis levels out there right now. Look around at some of your local processors and there'll be some good opportunities there.
Next week, Oklahoma State Extension's Darrell Peel will join us to look at cattle markets. Last month was the 5th driest September on record for Illinois, Missouri, and Michigan, but precipitation was above average here in Nebraska. Coupled with rainfall in the first half of October, that's led most of the state to favorable conditions in the latest U.S. drought monitor. Only 2.5% of Nebraska is in moderate drought, the least in more than 3 months. That had delayed harvest, but it could have benefited still growing crops. Earlier this week, we talked with Nebraska Extension forage specialist Bruce Anderson about guidelines for grazing or cutting alfalfa in October. We started by asking what this growing season had been like for alfalfa in the state.
Well, I think it really depends a little bit on where you are geographically always. I think we've had a pretty good season overall. We've had good moisture over much of the area, although there always are some dry spots out there. And of course, with good moisture sometimes comes rain damage and challenges getting the crop harvested. But also there have been lengthy enough periods for a lot of our growers to get their hay crop up in decent shape. So I think all in all, we're in pretty decent shape. We'd always like to have a little bit more high quality alfalfa than we may have right now. But I think the overall supply is going to be fairly adequate for the year.
Update me on where the growth stage is.
Well, right now, of course, we're into October. We're getting to the very near end of the year. Some places the alfalfa may actually have finished growing with some real cold temperatures. But we're at the time of the year when we're making some decisions as to, okay, how are we going to finish up with what's left standing out here in the field? And those are some of the last decisions we have to make during the alfalfa growing season.
And what are some of those options?
Well, when we take a look at fields that still have quite a bit of standing alfalfa out there, we certainly have all of the harvest options available to us. We could be cutting it for hay, or we could be chopping it as silage. We could be grazing it. I think we have to take a look at which option fits our operation the best. What is our need for that alfalfa? You know, do we really need to go through the expense and effort of getting it harvested? And really consider what the environmental conditions are like that may either hinder or benefit us in terms of the harvest at this time.
Give me some guidelines for either safely grazing or maximizing and making sure you get good quality production.
Okay, well, let's start with the grazing. You know, of course, probably the two things that we worry about with grazing is, first off, bloat, and wanting to avoid that with the livestock. And the second thing is just doing damage to the alfalfa. The latter one is pretty easy to kind of overcome, as long as we have a good firm footing so that the animal's hooves are not going to be tearing things up. We probably aren't going to do a lot of damage to the alfalfa. The bloat is a little bit more challenging of a situation to deal with. You know, when we have real green, lush alfalfa out there, that can be pretty risky for grazing, and we have to go through quite a few exercises to minimize that risk out there. But one thing that can work in our favor this time of year is that as soon as we start getting some real cold temperatures, and I don't really know what real cold definitely defines as. It may be 28 degrees, probably more likely 20 degrees, where we definitely see that alfalfa starting to wilt in the field. Then after that wilting has occurred, for a couple days, the bloat risk is a little higher. But if we wait for about a week after that real hard freeze has occurred, the bloat risk can go down quite a bit, and we might be able to graze that alfalfa a lot more safely and get a lot of good feed quality out of it.
And thoughts on cutting?
Well, cutting kind of follows some of those same types of guidelines. This is usually the time of year when we have our very highest quality alfalfa. If we're looking for something that's a real premium horse hay or dairy quality hay, the cutting that can occur in October oftentimes can give us that type of alfalfa, but it's a very slow time for hay to dry, and so it presents some special challenges to us that way. Also, we might want to look at the temperature. You know, I like to tell people that if you're looking at an October hay harvest, we may not need to really worry about that temperature and whether the alfalfa is going dormant or not if we've had at least 6 weeks of growth since the previous cutting. But if we're a little bit tighter than that, then we may want to wait until we get that real hard freeze that causes the alfalfa to really go dormant, and then that's the same kind of temperatures that we were looking at for grazing. We want to see the alfalfa actually signal to us that it's been damaged by the cold temperatures, it's wilting, it's starting to dry down. The thermometer may be our friend, it may be our enemy. You look at the temperature and you think it's going to be doing one thing, but the plant may tell us that it's doing something else.
On UNL's beef website, Nebraska Extension's Aaron Berger discusses sampling hay. You can find that at beef.unl.edu. The U.S. Department of Agriculture says farm program payments to crop producers enrolled in ARC and PLC for the 2016 crop year will add up to about $8 billion. ARC, Agriculture Risk Coverage, and PLC, Price Loss Coverage, are safety net programs that offer assistance with specific drops in revenues or commodity prices. Nebraska Extension Policy Specialist Brad Lubben joined us Wednesday to explain what Nebraska farmers can expect from those payments now and in the future.
We have seen those payments actually come out the door into producers' accounts. Payments were relatively similar to where they've been the last couple of years. That is to say, prices have fallen far enough that ARC payments are big. PLC payment rates, particularly for wheat and grain sorghum, were substantial as well. And we have to the tune of somewhere around $650 million of payments to Nebraska producers on the 16 crop that just arrived in the bank this month.
One of the questions in the past has been, why is my payment so much less or so much more than my neighbors across the county line? Can you explain maybe what that variability could look like and why?
You know, we continue to see that variability across county lines, everywhere from $0 or near $0 payments to in excess of $80 or $90 payments per acre, per base acre. And we have to remember in the ARC formula, that agricultural risk coverage program at the county level, it's a county average yield, it's a national price in that formula. Everybody gets the same national price, but that whole ARC payment covers only a 10% band of revenue, which means if everybody has the same price, it only takes a 10% shift in yield relative to benchmark to go from no payment to maximum payment. And so it's not surprising that we see substantial variation across the county lines, but it is a substantial number in terms of payments.
For the state as a whole, can you explain where these numbers could be for 2016 and maybe how that compares to 17 as well?
Well, as we've seen, the 14, 15, and 16 crops, we saw substantial payments, in excess of $600 million in Nebraska. The 17 crop that we're hopefully harvesting now, although we're struggling there too, but the price levels are struggling. And we're at the point where ARC payments would continue to be paid out on the 17 crop at current price levels. Even for soybeans, we're at that point right now where any further drop could trigger ARC payments as well. But they won't be, by any calculation, as big as what we've seen in the first 3 years. In fact, if we do some projections based on current yield numbers, current price numbers, we might see in the neighborhood of $200 million, a $400 million cut from what we saw in the payments in the state this year. So some payments still coming on the 17 crop to be paid in 18, but very small compared to what we've seen.
Would you expect PLC to ramp up?
We expect PLC payment rates to be greater than ARC payment rates. Remember that there's limited base acreage enrolled in Nebraska in the PLC program. Very little of the corn and soybean base, about half of the wheat and grain sorghum base, just a smaller overall number. So out of that $200+ million payments that might come next year, a substantial chunk of that is PLC as opposed to ARC.
Take you back a few years to when farmers had to make this decision between ARC and PLC, and they sat in numerous meetings about which one could be better for them. Is this, now this many years out, is this sort of how you thought it would play out?
Well, we expected that ARC was front heavy. It was built on an average. That average started with relatively high prices, and as that average came down, we knew that the guarantee would fall and any payments would fall. PLC has become bigger because those price levels simply got a little bit lower and a little bit lower. If we had stayed at near $4 corn, for example, that we started looking at in 2014, then PLC wouldn't be very big either. But we've dropped to low $3 corn in terms of a national average forecast. And so PLC payments have gotten bigger, ARC's gotten smaller, PLC has gotten bigger, but most of the participation in Nebraska in ARC means that total payments have gotten smaller over the life of this bill.
You'll be able to learn more about farm program payments in Brad's next Cornhusker Economics article, due out next week. The October Nebraska Farmer says Ken McCarty started working with third-party verification programs 6 years ago. This month's issue says Ken began with animal welfare audits through a third-party verification company owned by Where Food Comes From, Inc. That program gave way to audits for on-farm security, biosecurity, and most recently, worker care. This year, McCarty Family Farms became the first dairy in the nation to receive certifications in all 4 categories. You can read about McCarty's stewardship practices in the October Nebraska Farmer. As we initially told you in March, producers farming on highly erodible cropland would need to begin to manage ephemeral erosion differently than they may have before. Rather than disking the areas prior to planting, growers would need to use cover crops, terraces, or enroll the land in a conservation program. Most highly erodible land for water erosion is located in the eastern third of Nebraska. In 4 counties, more than half of the cropland is classified as highly erodible. As we told you previously, producers who didn't control soil loss from ephemeral erosion would be at risk of losing farm program benefits. Nebraska's Natural Resources Conservation Service offers funding support for some of those management options, but the deadline for sign-up is November 17th. Earlier this week, Britt Weiser from Nebraska's NRCS joined us to discuss this issue.
Well, Jeff, ephemeral gully erosion are those small ditches that occur out in a field. Ephemeral means temporary, so it's kind of like a temporary ditch that will form after rainfall. The farmer typically smooths that out after harvest and then will plant through that area that following spring.
Why do they need to now do something differently with that land?
Since 1985, farmers have had to address conservation compliance on highly erodible land and wetlands. And they've always had to treat sheet and rail erosion, ephemeral gully erosion, and wind erosion. And in January of this year, our national office pulled back some of the flexibility we had at the state level to make it more uniform nationwide. And while some ephemeral gullies were having to be treated previously, now all of those on highly erodible land will need to be treated.
What are some of the options for management?
Well, everything from no-till can handle some of those. Cover crops can certainly help, and in some cases where there's just too much runoff water, permanent grass like in a grassed waterway or terraces or other practices may be needed.
Now, is there funding available to help producers in this process?
Yes, the NRCS has a popular cost share program, the EQIP program. We can cost share on no-till, cover crops, grassed waterways, terraces, any practice a producer would need. There's also the CRP program from the Farm Service Agency. They can do grass practices like a grass waterway, etc.
Can you outline some of those programs, maybe what the benefit would be of enrolling in EQIP or CRP or using cover crops, things like that?
Right, so EQIP would pay a cost share. It'd pay 50 to 75% of the cost of installing that practice. CRP would do the same, plus it would add an annual rental payment on land that was taken out of production. So a grassed waterway that's an acre or 2 acres in size would get an annual rental payment in addition to the cost share.
We talked with Craig Derrickson about this earlier this year. Can you update me on how the process has gone this year, sort of what NRCS has been doing to work with producers?
Yes, each spring we're required to do some compliance reviews to see that farmers are following the rules on highly erodible land compliance. We get a random list of tracts we have to look at from the Farm Service Agency, and this year we looked at 1,417 tracts across the state. And we have some that are out of compliance, generally around 2%. That's similar to previous years. And a lot of them that we gave a variance this year. A variance means they're in compliance, but there's some things that you need to fix before we look at it again next spring.
So you talked with those producers and said, in these ephemeral areas, this is what you need to fix. What happens now?
Well, now we're hoping that they want to work with us on a conservation plan on how to best address those areas. Some have come in already and asked for a conservation plan, and we're working with them. Some have not. We're still trying to get the word out, hoping they'll work with us. Ultimately, they can fix it on their own without our plan, but we can certainly help them pick the best practices.
But these aren't the only producers. There are producers outside of this that could have the same issue, correct?
Yes, that's right, because each year we're only sampling maybe 1 or 2% of the tracts, and so there are many people that weren't reviewed this year, and certainly they will need to fix the same issue, so when they get reviewed they'll remain in compliance.
And at what point would they start to lose program benefits?
Well, there's a procedure where when we finally call somebody out of compliance, they can appeal that decision and et cetera, and they have appeal rights that go clear up to the national level. At some point, once their appeal rights have expired, they would be out of compliance and lose eligibility for various farm program benefits up to and including crop insurance premium subsidies, which is a very important program.
Now, with this week's weather forecast, here's Nebraska Extension ag climatologist Al Dutcher.
Well, folks, here we again for the weekly forecast. You know, this last week, the major precipitation event was last Saturday as advertised. Most of the heaviest precipitation fell south and east of a line from Lincoln to Omaha. The heaviest precipitation down in that Beatrice over to the Fall City region. Most of the northwestern portions of the state went precipitation free, and then we've seen the warm conditions move in. Little front moved through during the middle of the week, kind of a wind shift line, no precipitation associated with it. Then the warm front blew through. And we've seen the winds pick up on Friday as this trough that's approaching through the state right now basically increased the speeds to in the 30 to 50 mile an hour range with gusts across the state. Now as we go through the next 7-day period, it looks like once again the main precipitation event is this weekend. As we go to the upper air models, we are noticing that trough position basically over the northern plains extending all the way down to Texas. Most of the energy associated with this system remains over the northern plains, with the low pressures at the surface going to funnel that energy up into Iowa and points to the east. So it looks like just the southeastern and extreme eastern Nebraska will catch the majority of this precipitation, and even that, it looks like we're looking at less than a half an inch total. Then as we go into tomorrow, we get more of a zonal flow as this bottom end of that trough weakens. High pressure fills in behind the front. Nice cool conditions for our region, a relaxation somewhat of wind speeds, particularly western Nebraska. Heaviest precipitation well to our east. Then as we get into Monday, we start to see the trough trying to strengthen over the Great Lakes. That's going to pull some cooler air in, but it probably won't make it into Nebraska until we get into Tuesday. We still see low pressure down to our south. That's going to force most of the energy over the southeastern United States. Do show a few returns in the northern Rockies, but nothing to make it to the surface. And that trough digs almost like a winter pattern all the way down to the Gulf Coast as we go into the day Tuesday. Very cool conditions will invade much of the eastern United States, including Nebraska and the northern plains. As the precipitation itself works its way eastward, it looks like dry conditions all the way to the west. Then we see another trough trying to make its way into the Pacific Northwest. We'll start to slide toward the Great Lakes as we go into the day Wednesday and into Thursday. Surface high pressure system to our south. Low pressure moves across the Canadian border. That takes all the moisture well to our north. We see dry conditions, good harvest weather. Then we see that trough trying to deepen once again, so that's going to bring a reinforcing shot of cold air into our region as high pressure slips into the region. No moisture to speak of. The low pressure down in Texas will feed moisture up, but it will not make it in to react with that front moving through. Looks like just a little bit of elevational snows up in the northern Rockies. And then we get on Friday a full latitudinal trough developing in the eastern United States that keeps the cool conditions in the east. Out west, much warmer conditions build back into our region. We do have a pesky little low pressure system over eastern portions of Wyoming, but that doesn't look like it's going to drop any precipitation. Now, the 8 to 14 day forecast is indicating from next Tuesday to the following Thursday, it takes us into the Halloween period, above normal conditions in terms of temperature for the western United States, drier than normal conditions over the central United States.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean prices, cutting alfalfa in October, farm program payments, and managing ephemeral erosion. As always, you can keep up with Market Journal during the week by following us on Facebook, Twitter, and Instagram. Next week, Daryl Peel will be our cattle market analyst, and Ken Hallaving will talk about considerations for storing grain. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.